Economist and MD at ESG Analytics, Sifiso Skenjana speaks to us now as we continue with the reaction around improved economic growth. Good evening to you, Sifiso. Is this what the market expected or slightly better?
Good evening to Ms. Sang, of course. I think some of the economists that were polled, the median expectation was about 0.5% increase in the GDP number. That coming out slightly lower at 0.4, of course, I think is slightly below expectations. But it seems, of course, in terms of what the consensus was, it's not too far off. In terms of what is quite interesting to read from the number, we saw some revisions coming out from the previous quarter that growth in essence was revised to about 0% and not negative growth compared to that particular quarter. This is also happening to Ms. Sang at the same time when Stats SA had to come back and say that there were flaws in their estimations of the consensus numbers. And this is also a big issue that we did flag some years back when Minister of Finance Chidombo was still there, that you can't defund or reduce budget from a Stats SA or national statistics point of view. So I think there's also just an inherent issue for me in any case in terms of the integrity of the numbers that is coming through, and also that we really have to make sure that Stats SA continues to be meaningfully funded so that these numbers actually are readable and we can make sensible inferences from the statistics that we're reading.
With that caution that you've highlighted, what's to be said about the current economic climate? Is it a true reflection then of this 0.4% growth in GDP? But also at the same time, what does that 0% revision now mean? Because at the time, in the first quarter, we were thinking that it's all negative because it was a contraction.
I mean, so revisions happen all the time, so that's not necessarily an issue. I think is that as the data comes in, it also gets reassessed, and so some of the data could have had a bit of a lag effect. And so the issue is not necessarily revisions. I think it's just the quality of the data collection, the process through which we get then ultimately whatever statistic that comes out. From a reading point of view, if, we are to, I think I'm always a proponent that we can't look at one statistical point to make an inference around what's happening. So if you look at what's happening from an unemployment point of view, we had a worsening outcome in terms of unemployment. We've got lower inflation, and so there's a demand dampening that is taking place. There's lower activity that is coming out of some of the banks from an earnings point of view. And of course, in a lot of the other sectors as well, there's very minimal activity, but there's in this GDP print, of course, coming out as a positive print of 0.4%. That's telling you very interesting things, because on the one side, when you look at the fact that GDP expenditure in South Africa, at least the GDP print, 59% is a function of household expenditure, and you've got dampened demand coming from a household point of view. And then it means that statistically, the numbers are actually moving in very different points. And that's not telling you about good economic activity. It's not telling you that we're in a healthy space. In fact, it's moving into a very dangerous place where we've been before for a good decade, where we talk about jobless growth, where we can have a positive statistical print, yet it doesn't translate into meaningful economic activity. And so as we read what we're seeing here, I think we really need to get to the fundamentals, and we'll see that I think the health of the economy from a core structural transformation point of view, is really, I think, for me, a point of concern, and we really need to be worried about that.
As a parting shot, the near-term outlook, is it as grim as you just put it in the latter part of your statement there?
I think you're a bit generous with the word grim, but I think, of course, we're going to see probably some interest rate relief. Hopefully that reduces the debt burden at an executive, at a corporate level, as well as at a household level. So that kind of inflation dampening is coming through. We saw that coming through from a relief at a petrol price point of view coming in tomorrow. And so we know that petrol price, the variation, at least in inflation, 25% is explained by changes in the petrol price. And so the inflation experience of household by petrols is quite meaningful in this particular context. I think there's some pressure still coming from administered prices, with Eskom now still applying for very, very high increases in electricity tariffs. And I think all of that is going to continue, I think, putting quite a bit of pressure. From a jobs point of view, we've seen that there's a big transfer and shift from full-time jobs to part-time jobs. That must give you a bit of a worry in terms of then also the sense of financial security that households will have, as well as the sense of investment trepidation that is coming from businesses. And so I think the outlook is certainly not exciting at this point in time. I think grim is a bit too far down, but I think we really need to, walk this line particularly cautiously as we look at our economy for 2024.
Thank you, as always, for your input. Sifiso Skenjana there talking to us about a reaction to that 0.4 expansion in the South African economy, as indicated from data by Stats SA.